Welcome back to Alpha Recap, the daily wrap of market moves and stories that mattered. Markets were closed for the day, and we're walking through what moved the tape. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, glad you could join. Big day of headlines, crypto balance sheet shocks, massive flows in leveraged ETFs, a legal overhang on a small cap, and a few corporate finance moves that quietly matter. Lots to unpack.
Let's start with the biggest surprise. A miner turned balance sheet player that announced a huge stash of Ether. So, what really stands out here is how big this is.
Right. Bitmine Immersion Technologies told investors it now holds about 4.4 million Ether on its balance sheet, and importantly, more than 3 million of that is staked. That staking position alone was worth about $6.1 billion at roughly $1,998 per Ether.
And they said total crypto plus cash came in at about $9.6 billion. That's not a small mining operation anymore. That's a corporate treasury with material crypto exposure.
Exactly. I mean, when you step back and look at this, a single public company now controls roughly 3.6% of the total Ether supply. That's market moving on the face of it.
Which creates two big shifts. One, the company's stock is now tightly correlated with Ether price moves. Two, they can monetize staking economics if their Maven staking solution rolls out as planned in the first quarter of 2026. That changes the investor playbook.
And for analysts, it means you can't value them like a pure miner or a pure operator anymore. You have to model the crypto on the balance sheet, staking yields, custody arrangements, and counterparty risk. Growth investors need to size exposure to reflect direct crypto correlation.
Some practical things to watch. Look for on-chain confirmations that those stakes are where they say they are. Follow wallet activity, and track any changes in the cash versus crypto mix in future filings. Quick reaction, big move.
Not what anyone expected.
Moving on, the tape also flashed a liquidity and positioning signal in leveraged inverse ETFs. Both the small cap inverse and the semiconductor inverse plunged on huge volume.
Yeah, that tracks. The small cap bear product fell about 4% on roughly 113 million shares. The semiconductor bear fell about 2.5% on roughly 656 million shares. That's heavy turnover.
Heavy volume like that in 3 times inverse products usually signals one of two things: forced short covering inside those inverse instruments, or a broad risk-on rotation where buyers were loading up small caps and semiconductors.
Right. And the other thing is leveraged products rebalance daily. When volume spikes, rebalancing flows can amplify moves and then come back the other way quickly. Traders using these instruments face amplified risk, and portfolio managers should be watching for spillovers.
So for anyone listening who uses leveraged ETFs, stop discipline matters, implied volatility and sector ETF volume matter, and these spikes can lead to abrupt reversals.
Short reaction, huge flows.
Let's shift gears, legal and governance news. There's a class action lead plaintiff window in a small robotics name that creates a multi-quarter overhang.
Robbins Geller put out a notice giving buyers of Richtech robotics securities between January 27th and noon Eastern on January 29th, 2026, the chance to seek lead plaintiff status. The window is narrow, just 3 days.
A narrow window limits who can lead the suit, but whoever does can shape litigation strategy and any settlement. For small cap names, that can become a real distraction, affect liquidity, and tie up management time for quarters.
If you fall in that class window and you're an investor, it's reasonable to talk to counsel and monitor the public dockets. Court filings and motions will tell the story from here.
Quick aside, honestly, I was a bit surprised by this one. Legal overhangs on small companies often get overlooked until they start draining attention.
Agreed.
Corporate finance highlights were quieter but still meaningful. XTI Aerospace secured a $20 million credit facility from JP Morgan. Not huge, but for a growth stage aerospace firm, it's useful near-term liquidity.
And Morgan Stanley and Foundry sold a senior living portfolio called Spring Arbor for about $296 million. That sale is a tidy data point on healthcare real estate pricing and could indicate redeployment of proceeds by asset managers.
Also, a quick private market note. Brennan Investment Group promoted someone to a regional VP focused on Florida. These regional hires often precede deal flow and can change local supply-demand in industrial real estate.
Micro moves that matter over time.
On the AI and efficiency front, Heliant Technologies announced integration with Laurel AI to automate time capture for law firms. That sits on top of the Microsoft ecosystem because Heliant is a Microsoft solutions partner.
This is the classic AI transition from proof of concept to operational embed. Time capture is a persistent pain point at law firms. Automated, recurring revenue products that actually reduce friction can scale quickly if they show ROI.
Watch for pilot results, early client wins, and any customer logos that indicate adoption. Platform partnerships with Microsoft can accelerate distribution. In consumer trends, New Beauty released a Winter 2026 aesthetics report, a dataset called Beauty Engine that could act as an early indicator for elective procedure demand. That's relevant for names like Estee Lauder, Ulta, and Coty.
And Neurogon Health launched a consumer-facing supplement testing program for potency and purity. In a lightly regulated space, independent testing can build trust and shift purchasing behavior if a brand publishes and markets the results effectively.
Trend-wise, both stories point to consumer and investor preference for data-driven, verifiable claims. That tends to favor brands that invest in measurement and transparency.
Short reaction: data matters more.
Let's do a rapid-fire recap of the smaller but actionable items.
Bitmine, about 4.4 million Ether. Roughly 3.04 million staked. Staking solution Maven due in the first quarter of 2026. Total crypto plus cash about $9.6 billion. Major balance sheet crypto exposure.
Richtech Robotics, narrow class action lead plaintiff window, January 27th to January 29th, 2026. Legal overhang to watch.
The inverse ETFs. The small cap bear fell roughly 4% on about 113 million shares, and the semiconductor bear fell about 2.5% on about 656 million shares, read as either a leveraged unwind or risk-on rotation.
XTI Aerospace got a $20 million line from JP Morgan. Morgan Stanley and Foundry sold Spring Arbor for about $296 million. Heliant and Laurel AI teamed up for automated timekeeping. New Beauty's dataset and Neurogon's testing both point to transparency trends.
And Brennan's regional promotion? Small, but something to track for Florida industrial market flow.
Patterns and themes we saw. Corporates are consolidating crypto exposure and pivoting to staking as a revenue source. AI is embedding into vertical workflows with measurable ROI expectations. And the tape showed either a leveraged unwind or a real rotation into semiconductors and small caps.
Liquidity and active capital management cropped up everywhere. Asset sales, credit facilities, and more. For traders, the ETF flows demanded attention to stop discipline. For longer-term investors, Bitmine's disclosure and the consumer transparency moves were higher conviction items to model.
What to watch next? For Bitmine, follow Maven rollout timelines, on-chain proof of staking, and any shifts in their cash versus crypto mix. ETH price action matters a lot now. A 3.6% stake will move the equity.
For the ETFs, watch follow-through volume and implied volatility in semiconductor and small-cap sector ETFs. For Richtech, keep an eye on court filings and lead plaintiff motions. For the Spring Arbor sell, watch how proceeds get redeployed.
For Heliant and Laurel, look for pilot announcements and early case study metrics. And New Beauty's full report release. Get the procedure-level data if you're modeling elective demand into consumer names.
Final quick takeaway. Today, blended one big corporate crypto disclosure with market structure signals from heavy ETF flows, plus a scatter of strategic, operational, and financing moves. Trade around liquidity and stop discipline. Invest around transparency and staking economics.
If you want our models or deeper reads on any of these names, head to stockalpha.ai and ask. We'll answer directly. For listeners with questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch us tomorrow after the close for the next Alpha Recap.
Bye, everybody. Stay disciplined out there.